Questa foto è molto particolare perché c'è VanEck, uno dei gestori di capitali più importanti del mondo, che festeggia 70 anni di vita. Quello che vedete a destra è Matthew Sigel, è il responsabile della divisione asset digitali di uno dei gestori più grandi del mondo. Cosa forse più divertente è che ho avuto l'onore di intervistarlo giusto un paio d'ore dopo che è stata scattata questa foto. Delle bombe assolute. Prima però iscriviti al canale perché solo così ci permetterai di continuare con interviste di primissimo profilo. Abbiamo avuto Ben Zhu di Bybit, abbiamo avuto Gracie Chan di BitGet e ne arriveranno tanti altri. Adesso goditi l'intervista. How are you? You look pretty happy lately, actually. I mean, at least on X. On X, you look pretty pumped.
It's been a good year, and I think for all Bitcoiners, it's been a perfect validation of our bullish thesis that the Bitcoin ownership would broaden. It started really as an asset for individuals, and now governments and corporates. So making the ownership of Bitcoin look a little bit more like gold. And yeah, that was our thesis. It's playing out. So hard not to be happy.
It has been a good year for the price. It has been a great year, actually. I'm kind of surprised to see so many companies jumping in because, okay, we have Michael Saylor, and that's another thing. Then we have many other companies, and I think that many other will join. Yesterday, Coinbase had the quarterly report. They bought around $200 million, which is pretty much. Do you think the trend is gonna last, or people are trying to ride the Trump wave right now?
The trend of corporate adoption. I think that it is going to last, but I also think there's going to be some consolidation. So one of the biggest changes this year on Wall Street is the investment banking community has embraced Bitcoin based equities, and there's a lot of capital formation of IPOs, reverse takeovers, SPACs. All this is a function of the capital markets desks at the big Wall Street investment banks have turned on the switch and started underwriting these companies, even just for a couple days or a week or a month while the SPAC deal closes. Having that financing is extremely valuable. Having that distribution is valuable. Amazingly, like Cantor Fitzgerald, which is the investment bank owned by the current Commerce Secretary, they are now ahead of Goldman Sachs in the investment banking league tables
Yeah,
year to
yeah.
date. BTIG is ahead of Morgan Stanley, right? So the tier two banks that have embraced this theme are outperforming the tier one banks. And that's causing everyone to want to get involved. I think it got a little bit overheated, and not all these deals are going to work. And I think a lot of these companies will end up trading below the value of the Bitcoin that they hold. But that will make them into acquisition targets for the larger Bitcoin treasury companies like MicroStrategy. And when we look back in 5 years, it's my view that in aggregate, corporations will own much more Bitcoin than they do today.
Yeah, that was my main worry, actually. I mean, yeah, it reminds me of, do you remember the Grayscale premium or with the trust?
Mhm.
The Grayscale trust, the Bitcoin trust traded with a big premium during the previous bull market. Then when the premium disappeared, basically things started going south for the whole market. So you say that the small ones, the ones that entered the market recently, will be an acquisition target for the big companies like Strategy. That's a pretty interesting point of view. Do you think it's gonna work for Ethereum, Solana, BNB? Now everybody seems to want to jump in, and they're trying to find a crypto asset that nobody already bought. Do you think it's gonna scale that way, or it's gonna go that way, or Bitcoin is still different?
I think it will work for other projects, other coins. I still think there's a lot of uncertainty in the altcoin market generally about the value proposition for these coins and how durable are the customers and whether, how much of a winner take all environment it will be for programmable open source blockchains like Solana and ETH. Um, to the extent that they succeed, I think there will be treasury companies, and I think that there may even be more of a revenue story because of staking and
Yeah.
restaking and some of the monetization that can occur on the open source blockchains. I guess I'd push back a little bit on your comparison to the Grayscale GBTC trust,
Mhm.
which existed only to buy Bitcoin. These companies, like a Meta Planet, for example, has done very well in the options market.
Mm.
Essentially
Yeah.
trading around their own stock. MicroStrategy now has an entire capital stack of securities, and the largest hedge funds in the world have trading desks that have basically been purpose built to arbitrage the various pieces of MicroStrategy's capital stack, and has that company has deep relationships with the convertible arbitrage community on Wall Street, and ways to monetize their Bitcoin holdings that Grayscale GPTC didn't have, wasn't designed to have. So I understand the comparison in a bear market. When these stocks fall beneath the one times NAV ratio, it's going to be tricky for minority shareholders to realize the underlying value because of the inertia. The management teams will want to keep this thing going so they can collect
Yeah.
their salaries. And like, do they really want to start shrinking and selling their Bitcoin stack to buy back stock? Not all of them will agree to do that. Although I was very encouraged to see Bitmine, the Tom Lee Ethereum acquisition vehicle, this week authorized $1 billion buyback, indicated that they would be open to selling Ethereum if the MNAV falls. So there's going to be winners and losers in terms of communicating to the market the strategy, executing on that strategy, trying to crystallize value if the MNAV falls too far. And that's where I think there's great opportunity to pick winners and losers, and that's what we're trying to do in some of our strategies.
Some of your strategies, but you have also passive strategies. VanEck launched Bitcoin ETF, Ethereum ETF. You have a bunch of crypto ETFs waiting on Paul Atkins table. Let me be straight. Are you happy with Paul Atkins? Yesterday he had a big speech, actually, a very big one.
Uh, Mostly happy. Mostly happy. Like we would like the SEC to go back to the first come, first serve process for ETF approvals, right? We were the first
Yeah.
TradFi issuer to file for a Bitcoin ETF 2017, and we had to come to market, at the same time as BlackRock, right? Like that's not very fair. That's not a good way to encourage innovation. It's a great way for Larry Fink to get rich and everyone to live in this vanilla world where all the products are the same. But I think the SEC should really go back to incentivizing innovation by um, reverting to the first come first serve approach to ETF filings. We also had a problem with the approval of options on our
Yep. Yep.
Bitcoin ETF HODL, which really took longer than it should have. This is a $2 billion AUM product. There should have been no reason to wait so long to approve the options, but that just got done yesterday, concurrent with the approval of in-kind creation and redemptions for ETFs, which will really lower the cost to operate these products, and consumers should feel that in the form of lower spreads, tighter discounts and premiums to NAV. So for the industry as a whole, give the new SEC an A plus. When it comes to our business specifically, we have a few quibbles.
Got it, got it. But Van Eck and other ones started moving before the elections. Was it a bet on the win of Donald Trump, or you believed that even with a Democratic president, there would be a future for crypto ETFs?
We were bullish on the Bitcoin price specifically heading into the election. If you recall, there was a squishy period, September,
Yeah.
October,
Yeah.
um, and it got to the point where Bitcoin was sold off enough that even a Kamala Harris presidency, with all of the debt and deficits and misallocation of capital that would have implied, probably would have been bullish for Bitcoin. We still had some question marks around the altcoin market that were resolved with the election. But from our business activity, we really slowed down on new product innovation in the last couple of years of the Biden administration because there was no upside. Nothing was getting approved. Project founders being sued, all the activity moving outside the US. So the election really was a catalyst. I remember the day after the election, we had our crypto huddle weekly meeting chaired by CEO Jan VanEck, and he challenged the product development team to get back to work and start bringing new products to his desk. And so since the election, we've been much more active on bringing new funds to market. We brought a on-chain money market fund called V-Bill to market, which
Mhm.
is competing with the BlackRock Biddle Fund and now has close to $100 million in that fund. We launched the VanEck On-Chain Economy ETF, the Node Fund, which I'm managing, which is equity exposure to the space, actively managed, diversified. So we like active in this space. Our active funds perform better than our passive funds. And then we did selectively file for a couple of single token ETPs like BNB, Binance,
Mhm.
and AVAX, Avalanche. But we're being a little choosy on the single token projects, and you don't see an enormous market for those, and a very competitive space.
So yeah, basically, we are we are in Europe, and Europe had its wave of ETPs in 2021. In 2021, in 2020, there are really many products. There is basically an ETP for every token in the top 100, in top 200. Yeah. And at least in Europe, it didn't work. You told us that you're being choosy. What do you look for? Actually, what makes the difference? Why
Yeah,
BNB and not
it's
Cardano, for example?
Yeah, few different factors. One is that we want to have internal conviction that the token is going to be a good investment.
Mhm.
So with BNB, we have that the way that the token is structured, the performance of the token over time, the drawdown that it had relative to others, Binance's fundamental leadership as an exchange in the space. So we have to be comfortable with the investment thesis. We have to have the support of our counterparties. So you can't bring an ETF to market without a lot of different partners on the exchange side to source liquidity, custodians who will help us hold the coins, market makers who will create, redeem the ETF. So there's a whole ecosystem that has to get on board with the products. And then we want to see customer demand where we feel like there are buyers on day one for the product. And so for Binance and Avalanche, we were first. So we feel
Mhm.
confident that we can have some leadership in those names, especially if SEC reverts to that first come, first serve process. But we don't just want to be the fifth issuer to come to market with like an XRP ETF as an example.
Got it. Got it. Got it. Actually, I mean, Bitcoin ETFs started pretty strong. Ethereum once took what, 1 year before seeing some decent inflow. Do you think it's gonna be the same for altcoins ETFs? I mean, markets need time to understand the products, the digital asset space, what they are for, because explaining. Yeah, I remember somebody from BlackRock saying that explaining Bitcoin to normies, to normal people, is very easy because you have the analogy of digital gold. Explaining to people Ethereum is a very different game. And do you think it's going to be the same for the other altcoins? I mean, there is a space to explain to people that they may be valuable and that they could be a decent option for a small allocation in a portfolio.
Yeah, I think that was a very hard conversation a year ago, and it's getting easier thanks in part to some of these treasury companies who are creating good spokesman for Ethereum and the altcoin space. We also feel quite confident that we're going to be able to turn on staking for the US ETFs, likely starting with Solana, because the unstaking time for Solana is quite rapid, less than 3 days. So it's going to be easier to manage that within the constraints of a regulated ETP. But Ethereum staking should also come, I think, by the end of the year, and ability to create and redeem these ETFs in kind so that every broker dealer is actually touching the token itself. That is could be very powerful for the penetration of these ETFs. The other thing that's making it easier, I think, to communicate the story for the Ethereum and the Solana ETFs is the momentum around stablecoins, especially the banks, the mega banks in the U.S.,
Hmm.
Bank of America, J.P. Morgan, Citi, who have all in the last few weeks said that they're going to start innovating on stable coins for open source blockchains. So not just their own walled garden deposit tokens, but innovating on top of, to start, likely Ethereum-based stablecoins. So that value proposition for ETH, I think, will become more clear. And there's low expectations still. If you look at Ethereum ETF holdings as a percentage of the market cap, or
Mhm.
Ethereum treasury companies as a percentage of the market cap, way, way lower than for Bitcoin. So we do think that that gap will narrow somewhat. But the adoption at the institutional level for ETH and Solana, it's really, they're thought of more as kind of leading edge tech platforms
Mhm.
rather than this digital gold narrative. So the digital gold kind of can appeal to everyone.
Yeah.
Any allocator can, that'll resonate with them. But when it comes to evaluating Ethereum's market cap versus Solana or versus some of the walled garden platforms, it takes maybe a more specialized analyst and a bit more time.
Got it. Got it. I have a bit of a spicy question, but if you don't want to answer that, it's fine. Yeah, there is a lot of fuss. There is a lot of everybody's talking about stable coins. It's the main theme at the moment. Do you think that the capitalization of Circle makes any sense, or it's more of a photography of how much hype you have on the stablecoin market?
Yeah, a little of both. Uh, i- what you see in equity markets often, especially in the kind of ZERP era, is that a clear leader in a growing market can command a very high valuation, and that valuation can persist for quite some time. Look at Tesla, look at Palantir. Look at Figma, who just went public
Yeah,
here
yeah.
yesterday, and the stock tripled, right? So I think Circle is enjoying some of that, really being the only pure play in the market, which is kind of institutional grade equity. Um, but I agree with you that sitting here today at a $40 billion market cap compared to, Coinbase at only 80 billion, and Coinbase takes, a good percentage of Circle's revenues, especially for the assets which are on platform at Coinbase. That is, a little bit funky, right? So for me, the
Yeah.
risk reward in a Coinbase is much better at the current market cap, and that's reflected in how we traded the stock. We in the Node ETF, we did participate in the IPO. The position size got up to 2.5% or so, like when the stock hit $200, and we've taken down the position size quite a bit, very small position size at this point. But I don't want to go zero weight, because this
Okay.
is one of the few stocks that the institutional community can can buy.
Got it. Do you think there are going to be more I IPOs of? I mean, there is Gemini, the exchange. Probably Kraken is gonna get to Nasdaq or NISA too. BitGo sent IPO request to SEC. Do you think there are gonna be more, or it's pretty much done, at least in the United States? Are you waiting for more?
No, I think there's going to be a lot more, and I don't think Kraken is going to come until next year.
Mhm.
So there's and there's still a lot of SPACs that are hunting for private acquisitions in the space. So there's like an 18-month ticking time there where they have to strike a deal. So assuming that the macro doesn't collapse, there should be more than just 2 or 3 IPOs that come here in the next 2 or 3 quarters.
Got it. But you look very bullish on X. You're probably the biggest bull from. Can we say you're from Wall Street? I mean, you're not a suit. You're a very nice guy, but I mean, people. You work at VanEck. VanEck is for sure Wall Street company. You're one of the biggest bulls. Is there anything that actually worries you, that doesn't look right, that you think will maybe blow, or that is going to get fixed now that the institutional investors are getting into the space?
Well, let's first talk about whether I'm one of the biggest bulls. I am. Yes, I'm vocal, but my price target for this year is it's not 500,000, right? Like I've put it in print many times. 180 seems like a level to kind of
Okay.
circle for me. And I, I while I acknowledge that Bitcoin volatility has fallen quite a bit, and that makes it much easier to justify from an institutional allocator's perspective. I- I'm not naive about how volatility can change, and this is a very reflexive asset. And if the macro conditions change and the path for interest rates change, that there's going to be drawdowns ahead for Bitcoin, and I don't see us reaching the 500K or higher until maybe next cycle. So I think it's realistic, but still bullish. And uh, we're always watching things like funding rates, leverage, the unrealized profits to see when Bitcoin blockchain looks really frothy. We got a little hint of a scare last week around the funding rates, which spiked for Ethereum especially.
Mhm.
So an indication that risk appetite was really strong, but it didn't persist. So it normalized reasonably quickly. Today is helping with that as well. So we're not really seeing that same froth in leverage, and that is what it keeps me pretty constructive. Feels like the way that Wall Street is helping with the capital formation here, I'd say dilution is the new leverage. So instead of like Celsius and
Yeah.
Voyager and these tech companies that were enabling leverage, it's Wall Street diluting the treasury companies. Still not a great experience for retail if you buy one of these things at the peak and they're diluted to death. Uh, but it's not as bad as actually owing money back. So I think that's something to observe.
So, yeah, so yeah, you gave a pretty big picture. I mean, you are choosy about the assets that you're gonna get into the public markets with your ETFs. You want to be recognized as a kind of pioneer, because yeah, look, people don't know what happened actually. You asked for listing before for the Bitcoin ETF. When things started getting sunny, uh, the big guys came in. They basically found everything ready for the listing, and you started the at the market the exact same day, so you had no advantage basically over the people over the followers actually. You're waiting for Paul Atkins to go back to the old regime where the first came the first served. You look pretty happy about what's going on. Otherwise, at SEC, you look pretty bullish. Do you like something about tokenization? I think that there is a bit too much hype about that. I mean, people think that on our side, the customer side, the investor side, we are gonna move stocks, money market funds, and such over DeFi. I think that that's not gonna happen. Markets on a certain level will remain centralized. You need authorization. They need to identify you. You can't trade using your wallet address. And do you think there is a bit of too much hype, or it's justified? I mean, it's okay to be so bullish because of tokenization.
I think you raise a fair degree of caution there. How quickly is tokenization really going to take market share from the bread and butter profit pool on Wall Street? There are still some obstacles, and I agree with you that it's going to take some time. And most of the way that we're expressing our bets in the tokenization space is in our venture fund, right? Betting on founders who can create the next CME for tokenization, clearing houses that are going to make all of these different standards interoperable and hopefully form a hub for liquidity, because liquidity begets liquidity. It's right now, the tokenization venues are very fragmented. Whether it's the on-chain stocks that Kraken is offering versus Gemini, like they're not interoperable. So will any one of those companies take a meaningful amount of market share from the traditional brokers this cycle? Probably not. Equities tend to move in advance of these major themes. I think it's okay to have a toehold in some of these stocks. But I agree with you that that it could take a while. And going back to my earlier point, a lot of times it's more about avoiding the losers than it is even about picking the winners. And that's really the vision behind the Node ETF, is like very diversified exposure to the winners in this space, avoid the losers, and hopefully with that we can provide a lower volatility alternative to some of the other crypto equity ETFs that are out there. And I'm pleased that since inception, the fund has outperformed Bitcoin, but with a lower volatility. That's through yesterday, from the inception of May 14th.
Cool, cool, cool. Yeah, thank you for being with us. I have a last question. Yeah, I'm not going to ask something personal. I mean, if you like Larry Fink or not, it's not important at the moment. But Larry Fink at the start of the year sent what I find a very weird letter to investors, because he compared the tokenization with the first stock exchange in the Netherlands, which he found a way of making markets more democratic. His example was that, yeah, farmers from that moment on could invest in the same markets where bishops and very rich people were investing. And Larry Fink finds that tokenization is going to be another way of making markets more democratic. I think that his point is to make private equity and private credit markets open to normal people, non-professional investors. But yeah, but I find it a bit not so straight, because there are actually good questions to keep the normal people outside of those markets. At the same time, we read a lot about liquidity problems in private equity markets and private credit markets. So I don't know. I mean, are we gonna be the exit liquidity of the big guys again? Because this time is gonna come with tokenization. We're gonna be very hyped. Oh, look, I can invest in the same markets of BlackRock and Blackstone and the other big guys. But yeah, at the end, something smells fishy to me. I don't know if.
Yeah, I'm going to be a bit charitable in my interpretation of that. So, um, will tokenization fix everything? I think what he's trying to reflect is that the combination of social media along with crypto is changing the capital formation process globally. So if you like, because crypto is cross borders, uh, an entrepreneur can raise capital on a Sunday, sourcing global liquidity, and then transmit that value proposition on social media to their
Yeah.
global audience. So it really is a different way that capital is formed compared to 10 years ago. And it's enabled by crypto and by social media. And what's the underlying technology of crypto is tokenization. So, to the extent that BlackRock or VanEck or whoever wants to distribute financial products to a global audience, like tokenization is really going to
Yeah.
help, and the regulatory relief that we're getting um, to trade some of these products in DeFi is really going to help. And I think that they're onto something with that. Your worry is around one piece of that market,
Yeah.
that there's like been too much private equity investment over the last 10 years, and now the universities are dumping their stakes, and there's a lot of like illiquid stuff that's trading at a discount, and maybe some of the sponsors would like to unload that on retail, and tokenization might help with that. That's, yeah, a subset of the first issue. So let's
Yeah.
buyer beware on what we buy from an individual security perspective, but recognize that BlackRock, VanEck, and others are onto it when it comes to tokenization changing capital formation.
Yeah, I think it's called the survivor bias. When we talk of private equity, we think of OpenAI or Anthropic or whatever, and we never think of the thousands of companies who went bust. So I think people are getting pretty hyped about a very risky market. That it's basically on the same level of risk of altcoins. I mean, now I don't have the perfect scale, but we are playing maybe in the same league. I mean, the chances of going to zero, uh, even the private credit market, yes, they pay huge interest, but they pay huge interest for a for a reason. So, Matthew, is there? And thanks for being with us. Is there anything that you are waiting for in 2025, 2026? Something like a dream that you think that could become true for the crypto market?
I'll go back to the strategic Bitcoin reserve. I think the expectations have come down quite a bit on that, and maybe there's something out of the federal government that could kickstart momentum there. Um, the rate cut out of the Fed would obviously help, and it's the absence of that optimism that's probably hurting the markets here today. So probably those two things.
So rate cuts, yeah, they're pretty materialistic dreams. I was expecting something more dreamy. But thank you, Matthew, for being with us. It's been real a pleasure and a honor. I hope to see you again. Actually, I mean, maybe to celebrate something bigger than the 2025. Maybe for Bitcoin at 1 million. Thank you again.
Yeah, anytime. Today we're celebrating VanEck's 70th anniversary. Our birthday is today, so
Oh,
yeah, that's one thing. And then also just thank you to Italy for your hospitality. I was there last week and enjoying the great people, weather, and food. So thanks for being such a strong media voice over there.
hi, thank you, thank you, thank you. We are very happy that yeah, you wrote to me that you felt very good in Italy. That's always great to hear because we are a bit no, self racism is a bit too much, but we are very Italians do not speak well of Italians or Italy, which is very weird. But we need foreigners to understand that we are not that bad. Thank you again.
All right, talk to you soon.